Hello and welcome to our afternoon session. I hope you still are full of energy at the World Computer Summit. And welcome to our panel about digital assets and beyond, revamping financial infrastructure. I'm super stoked to be here on this panel with a variety of players in the industry. And let me actually kick it off with Sina.
Sure.
Sina, you have worked for a variety of both traditional players in the financial industry. I couldn't believe when I saw the profile that you have more than 30 years in the industry working for...
Over 30 years, I know, I look young, yeah.
Yeah, you started at 12, I guess. But now, jokes aside, as you now reflect on that period and looking at different waves in the development of the space, how do you think, how far have we gotten actually in your view?
I have to say, maybe in the 25 years I was in traditional finance, I was not so much checking what's going on in the development because I was more with clients and more looking at investment cases. But in the 5.5 years now, I'm at 21Shares, I can say like we came a little bit further because I remember in the beginning, I don't know, I know some of you guys, when I spoke about crypto, people looked at me in big eyes and saying like, what, you're going out from traditional into this space? And I think today it changed a little bit because we have big players came to the market. More or less everybody knows what is Bitcoin. Some people know even what is Solana, smaller coins and so on. So we went a little bit further. But I must say, I thought we would be a little bit further already. Because if we look at real-time adoption, like from traditional finance, I thought when I look at the planning, we are a little bit behind now. I'm very honest. I don't know what you guys think about that, but I thought we would be more advanced by now in 2025.
Very interesting. So the sentiment that at least you get is that we're behind. Let me actually move to you, Maxim. I mean, speaking of sentiment, that's what you built a career on with Santiment.net, a leading analytics platform in the digital asset space. And as you are looking at the current behavior and sentiment of the market, how do you see that behaving and how is it maybe different from what you have seen in the past?
Yeah, that's a very good question. The difference, I will come now, but before that, there is a huge difference in general between traditional markets and crypto, and I had to experience the moment I entered it. It's, of course, volatility, even though nowadays stocks recently became as volatile as crypto, but before it wasn't the case, but also the cycles. The cycles of innovations much faster, typically 2 to 3 years. And we didn't have it in stock market or traditional market for a very long time. And by 2 to 3 years, you experience inception of idea, early adopters, nerds, smart money, and then not so smart money, cycle done, and repeat. And I'm only 7, 8 years, and I've seen it 3 times. And it's very fast. So in order to quantize it, or visualize it, or analyze it on a level of some good quality data, you need to build a lot of data infrastructure which don't even exist in current traditional markets. On-chain data, social data, dev activity data, no one really pay attention in traditional market. It's maybe like secondary or some additional data, where in crypto is the main source of data. So there is a big difference. And I know like hedge funds, when they come in and we try to onboard them, they're still working with quite traditional data, order books, volumes, exchanges, and you introduce to new concepts, it takes time. So I would say correct. It's still not as adopted by traditional markets, but people native to crypto, they're using it because there is a lot of alpha and they know, well, you know the value of alpha once you start using it. It's very attractive. So an adoption will happen probably in using the data faster, but building infrastructure, it might take longer time. Or it took already longer time because the data has been used the last 4 or 5 years. I know quite some players.
Very interesting. So it's a bit of picture that I get from here is we see that from a bird's eye view, there's almost two speeds. There's a quite small adoption happening, not as fast as you might have anticipated, Sina. But then when you double click just what's happening within the digital asset space, very fast innovation cycles, and that is, let's say, a bit disjoint from how traditional players would approach, for example, behavior analysis.
Very because it hasn't been regulated for a long time. It means a lot of opportunity, high risk, but super high rewards. So once you get exposed to it, of course, you start innovating, building, using all these different sources of data. It happens very fast. And now regulation, it takes a very long time. And we know it was suppressed on the US side for extremely long time. So it's actually only like last 4 to 5 months, we can see regulation being not so restrictive. We're lucky here in Switzerland, it was not super restrictive for a long time already. But the main money market still in US. So, and I hope and believe it will happen now faster once it's not so super regulated.
But it's only normal I see it in a different way because I'm more with investors and with people like traditional people really checking. And exactly what you said, regulation is something, there is many, I don't want to exclude you, Pierre, by the way.
I will jump.
No, please. I'll get to Pierre, don't worry.
Okay, great. And investors, for example, or if I look like more traditional people, they go with the regulation. Many things like they are really not sure. So if they are not sure about, for example, last year, they were not sure if the SEC will validate ETFs in the US. Then they bought a tick, it's done. So now the US will do it, so we will do the same, right? But if I look like, for example, to traditional investors or bigger companies, they still are not sure about this because many regulation points are still not where they want them to be. It's not that they cannot do it, but as long as it doesn't say like, yes, we will do that and it's good, they will not do it, you know?
Yeah, so it took us not even 5 minutes to get to the R word, regulation. But Pierre, I mean, you have witnessed this evolution from multiple viewpoints. You used to be an operator at RWE Middle East. You were actually my competitor at Roland Berger, but we managed to become and stay friends. And now you're driving it as a chief business officer at DFINITY. How do you see what has maybe held back adoption beyond some of the things that were mentioned?
I think if we want to tackle the main things that held back adoption, I think one thing, I'm not mentioning the R word because that's obviously always an easy thing to blame. But I think one maybe inconvenient truth is also that the industry itself hasn't really been very professional to a certain extent, right? I mean, I've done my first digital asset advisory project for government in 2018. Then Bitcoin crashed from 20 to 5. Then no one had interest in Bitcoin anymore. And then the first kind of banking projects to advise banks on digital assets, that was in early 2021, right? Everything was laid out, everyone understood that they want to go ahead, but no one went ahead, basically. And why? Because there's always something happening, right? So banks do their strategy, then FTX collapses, right? Or Luna collapses, or whatever. I think we still have a way to go until we filtered out all the bad actors in this industry to really make it a topic that people can really rely on and trust. I think we're getting there for sure, and Bitcoin is clearly leading the innovation on the digital asset side. The other thing is, from my point of view, I think for me, it's very clear that there's a significant growth in digital assets happening. I mean, you see the stablecoin growth that you guys actually did a great report, I think 2-3 weeks ago about it. Second is there's a clear trend of real-world asset tokenization that I think everyone is believing in. And then obviously the amount of crypto users, depending on which statistic you look at, is somewhere around 500 million, and is projected to grow. So there's massive growth coming. On the other side, I don't think the infrastructure is ready yet for that, right? Because if you look at just wallets, for instance, right? If you look at digital asset wallets, they're neither secure, nor do they have a good UX, right? And that's what we're trying to tackle now, is we try to build things for humans and not for degens, right? And I think this is a very important step towards digital asset adoption.
Moving away from the degens only. I like that.
May I add something to this?
Please,
I mean, yes, the adoption, like you said, I agree with that. But the big money, for example, we're speaking about big money, that will only come in if the things are really clear, I think. Like what I said before, regulation and so on.
Oh yeah, 100%.
Because there's a lot of innovation, yes, and there are little actors like playing that. But if you think today, I checked this week, 6.6% now is in ETFs and ETPs, which is massive already, because it's not existing for such a long time.
Yeah.
So I'm wondering now a little bit, will this adoption really go further? Or do we have now vehicles where we play again the old way?
Oh, I 100% agree with you. Now, you can see this with the Ethereum company that just launched, right? So I think we might end up in a maybe transitionary state where most of the money will actually flow into old vehicles for new investments, but will not actually embrace the technology that's behind it. So it's more of an investment class rather than a utility.
I really liked the picture you painted, Sina, about diving into the mind of these investors and saying that actually regulation is good in a sense that they get clarity. Now, what will it take for more of these decision takers in the traditional space, or where the big money sits, to actually really move further and do so faster?
Aside regulation, you mean, right?
Yes.
If I speak to them, it depends really with who you talk. But we have an expression in German who says like, if you don't know really, you don't eat that soup, right? So, I mean, it sounds very stupid because I said this already 5 years ago. It's still a lot of education who needs to be done. If I speak to people, they still believe. Just today I had a meeting with a hedge fund manager, and he, for example, told me, yeah, if you look at Bitcoin, for example, there's still nothing behind, Sina. So why should I invest into cryptos or Bitcoin? Because he said Bitcoin is something else than all the rest of the cryptos, right? Now we know that Bitcoin is here to stay because all the bigger actors are in now. But for the other cryptos, it's still a different story. And I think it's still, I'm sorry if I repeat myself in 2025 again, but I think it's still a lot of education who needs to be done. And then also the real-time adoption, what I meant before, do we really have this real-time adoption who really brings something? Because if we just have a tokenization from bonds on Ethereum, for example, is this really such a big deal? Because we in the space always think we're so important, everybody should know. But for this industry, it's nothing. They have other worries, No, and they make money. So why do they need us?
Yeah, and I like that point about just not taking anything for granted. I think we need to continuously, and I see that in my work as well, we need to explain, educate, and do so continuously. And I think it really takes these multiple touch points with the topic. Speaking about usage, you mentioned that it's really not just about the one-off doing a tokenization of, for example, bonds, but getting into more usage and maybe also looking towards you, Maxim, as you are looking at activity. Do you see patterns emerge where you see some actually healthy adoption and usage grow, or is it still the very, let's say, similar amount of narrow audiences that are picking up on some of these?
No, it's obviously bigger. I wouldn't say much bigger, maybe much bigger. And what we see is, as we also analyze social data, it's typically everything is driven by, of course, sentiment, but under sentiment, it's a different narrative. You can see it like a narrative, like viruses fighting with each other. And then you never know in advance which one narrative will really capture the market. Of course, in hindsight, everyone is smart and said, oh, ETF, America, everyone knew. Or the moment you know the narrative, it's not working anymore, like this halving did not work this time as before. So we see emergence of new narrative actually every year, one or two very substantial one. And typically every 2 years, as I said in the beginning, every cycle is driven very high in terms of valuations, or actually over valuations by one specific narrative. Yeah, 17 then ICOs and DeFi summits and NFTs and meme coins. So it's and beyond there is always now it's a combination of AI and Web3 and everyone looking what exactly will come out. Is it info fee or whatever? It's a rabbit hole if you start analyzing all these narratives. There are many of them. So they're changing, and each of them attracting group of people from traditional area where the relationships is defined in a traditional old way. There is a company building, there is owner, stockholder owners, there are users, and they don't own anything. Now it's being dissolved, and in a new way, there is more and more real true ownership, whatever we bring. Now we covered things like DeFi, where you own stable coins, which are actually very often you own with your own private key yield from US Treasury. Didn't exist 3 years ago. Now you can do it. And there is very safe ways how you do it. Just one example. So, and more and more this true ownership comes once you're exposed, once you use, you never come back. So you always stay here. Or you might do, due to lack of education, some quite painful mistakes. So you might burn part of your wealth, hopefully not everything. But if you learn and recover, you still stay in crypto. So we bring in waves of smart people who stays, who understand how much more efficient, sustainable, and beneficial for all societies in the future, so they stay. Okay. I know many people, they'll never come back. So we grow. It's just every cycle brings a lot of strange people, then it goes away, smart stays, and we grow again.
Very interesting,
yeah.
The smart stay.
What's the cost for that?
Cost?
That's a question, yeah, the cost in general.
We can count it, yeah.
No, but this is something really important, I think, for the innovation also, like what you said.
Yeah.
What I liked is also your point about the narratives, that those are the ones driving this movement, accelerating. And you mentioned the narrative on now AI in Web3.
Oh, yeah.
I think, Pierre, there is even some stuff in store even today on that front. So the panel is named Digital Assets and Beyond. So about the Beyond point, what do you see actually as the emerging narratives that you are doubling down on as DFINITY?
Yeah, and so in my point of view, there are only, at the end of the day, there will only be 5 use cases where Web3 tech actually makes sense. And I thought about this for a really long time, being in this space since the end of 2014, seeing all the DeFi summaries, meme coin, NFTs, and so on. So I think number 1 is Bitcoin, right? That has a sign of approval already by now. Number 2 is stable coins. That also has a sign of approval. Number 3 is, in my view, DeFi and real-world assets, so I would group them. And now come the 2 use cases beyond that hardly anyone is thinking about. Number 4 is sovereign compute and sovereign apps. We have a big problem in the world today because 90% of all your cloud data and all your compute power runs on infrastructure that is subject to foreign intelligence. And that means that you're not really running a sovereign IT infrastructure. You're running an IT infrastructure where intelligence services from third parties can actually access, shut down, censor, whatsoever. And this is what the Internet computer has been built to, basically taking the security aspect of blockchain and widening it to the entire compute stack. So that's number 4. And we see this, by the way, and this is also why we launched the ICP Alliance today, because we see this really resonates now because there's a lot of tech nationalism happening and people really start to worry about their digital sovereignty. Number 5 is what we're going to see today at 6 p.m. when Dom is going to give his presentation about caffeine, which is the new paradigm that AI is creating software and maintaining software on its own, and anyone in this world basically be able to develop their own apps just through prompting.
Yeah.
I'm happy to be contested on that, but I don't see any real-world value beyond these 5 use cases.
I love it that Pierre, despite not being a consultant anymore, can only think in 3 or 5 things for people
exactly.
to add. But in this world, so we have the whole financial use cases you mentioned with number 1, 2, 3. Yep. We now have sovereignty in different shapes and forms. We have now AI writing software. In this new world, where obviously we have financial players, and you were actually part of them for quite some time, Sina, what would you recommend them? How should they act and behave to make the best use of these new opportunities?
I mean, everybody's different. I cannot say what people should do, but I think the best is always to stay open for it and to certain things maybe to try. And there is so much offering everywhere. And I think I would go and check for players, whatever it is, someone who is serious, has a good reputation, someone I trust. And it could be for anything, I mean, that's my advice. But then I'm a little bit like before the party pooper, because I'm a little bit like, how do you say, like not the most imaginative person. But it depends a little bit for what, If we talk about investments again, if you just want to play around with a little amount, why don't you try different things? But if you want to go for bigger amounts, then I would go with players on innovation, with people, or even foundations or people behind their projects, which have a good reputation. Because some people, they had like really nice projects before, we thought. Everything went belly, and then they create something else. They were kind of almost arrested with one leg, and they create something new. Is that good or not? I don't know, but everybody has to decide for themselves,
Yeah, no, I like that. Not just about a second R word, it's about reputation and trust. I like that. I mean, Maxim, you also mentioned that you witness all kinds of different players hopping on the waves, smart money, dump money, different types of money. Not so smart money, big money, small money. What would you recommend if one wants to embark on this in a positive way?
Well, actually, I would follow up on what Sina said, that in crypto, reputation is a key. We have now long history already for years. So there are enough established people, organizations, foundations who proved at least for 2-3 years and more what they're doing because of their vision or mission, and they don't scam you. So that will be my very first choice. Reputation of whoever you've been involved, it's a key. Because no chance you can understand if it's any complex solution, what's going on really in the background. And people who cares about reputation, they put upfront all the security audits, what happens if. People who don't care in reputation, they try to fix when it happens, but it's too late, everything's gone. So it's very different use cases. And it repeats every single time, almost no exceptions. So to pay attention to reputation, yes. And maybe always remember, at least I, for myself, keep remembering that why crypto here and blockchains, it's about exercising your ownership rights. Yeah, for complex or big wealth, custody is good. But the whole innovation goes in cycles. It's been implemented ownership on many different levels. Nowadays, we talk about ownership, not yet on the AI models, we are going there, but at least on intelligence you produce with the help of AI models. And if you're looking into really, really big upsides, you should look into these areas where which platform implements, and there is enough developer resources and community attention, this modern wave of ownership, digital ownership on whatever is being produced in the world around us. Yeah, we've seen a lot of examples so far. Luckily, it's only early examples with Pump Farm, and who is into crypto knows these examples. It's early. There will be much more serious ones. Twitter has to be replaced. Facebook has to be replaced. With true ownership, whatever you produce, it's yours. You can monetize it, and you decide, I don't want to share it with one. It has to be done from ground up, correct way. It's still coming.
I like that. I like that, and I like you're doubling down on the reputation part.
Yes.
But then you say also looking beyond the obvious and say which projects really care about true ownership behind it. I mean, this segues very well to some of the points you mentioned, Pierre. Now, you've seen in the dozens or hundreds of players you work with, done projects, you've seen, I think, the good, the bad, and the ugly. What do you think separates the ones who are successful in this space from the ones who aren't?
I think number one is, it's really that there's a certain fundament that actually drives them, and the fundament is not only the quality of people they have, the seriousness of the people that work there. So it's not just some kids in a garage hacking something together, but there's a proper kind of engineering team. And the second is really like the values they have for enduring to stay course on the mission they have, right? Because I think a lot of projects that were just chasing quick money pivoted to every flavor of the month from time to time, and then might even end up not doing anything at all. So that these two things I think are really fundamental, and I would encourage every government or enterprise that wants to choose a chain or wants to work with a new tech provider, it doesn't necessarily need to be Web3, I think the same might be true for AI, to really go and see the team, go to their office, see if they have a real office, if they're real people working. But the main thing is, I think Web3 in particular is a bit like combat sport, right? I mean, you have to do it, otherwise it's hard for you to imagine. You can't read about it and know about it. So it's really about touching the tech. And I think probably all of us had this magic moment where you explained, I don't know, Bitcoin or stable coins or whatever to someone, and you did a transaction and then it clicked, right? So touching the tech is, I think, what I would really encourage.
Great. So let me end the panel with a round of quick shots, and I'm going to ask each of you the same question, and I want to have a straight answer. So the question is, as we talk about revamping the financial infrastructures, who's going to win? The traditional players of today or the new disruptors? Pierre, I'm going to start with you.
I go with the new disruptors.
Okay. Sina, what do you think?
Of course, it's the traditional.
Okay, they will be educated and they will learn.
No, I mean, it depends for what.
Okay.
It's an open question, right? So it depends for what. I mean, I'm of course from a traditional world, and I believe in that, what we are doing, but of course there would be also new adoption. I think there's place for everybody, to be honest, depending for what it is.
Place for everybody, that's a very Swiss answer, I like that. And Maxim, what do you think?
I was lucky to reflect a little bit. I third one to answer. I actually agree. Now I'm looking about exchanges. So there is Coinbase, there is Binance, everything more or less traditional, regulated, but there are hyper-liquid, I don't know, there are plenty of all the Solana, and they have massive adoption too, and they seem to be working fine. And I don't see at the moment a case when one wins after, over another. So probably some kind of symbiosis might work. Maybe some use cases, indeed, there could be winner. But it's not a quick question. Need to reflect a bit more. Like I need to do reasoning in my head. Yeah, more balanced approach. Yeah.
More balanced approach.
Yes. Yeah.
What do you think as a moderator? You can also say.
What I think. I mean, I think we're a very diplomatic crowd. I do believe that the opportunity is so big that if you are serious about it, and I think we've heard about it here. Some of the new players, they are, really accelerating, and the old ones, they might be underestimating it, because I think that's going to bite them in the butt. Is if they still lean back and say, "Oh, as long as all the R words haven't been spoken, I'm not going to embark on it."
Possible.
And we see also in our analysis that some of these new exchanges, for example, they're moving into the traditional space very quickly. They're acquiring players left and right. They're building out offerings, and they're using the digital asset Trojan horse to move into broader use cases. So I'm probably more in the disruptor camp, but it was wonderful to hear from each and every one of you. I don't know, Sina, you actually want to say one more?
Yeah, I wanted from you guys. This was not discussed, and we had no idea what the questions are. But in one word, what do you think is the next big thing without the long thing?
The next big thing?
Yes.
I forgot my Steve Jobs.
What do you think is the next big thing?
The self-running internet, and you're going to see it at 6 p.m. today.
Okay. What do you think?
The next big thing.
Yeah, very short. 50 seconds we have.
It is in intersection AI, information, and reputation. How it's being used to produce verifiable quality. Yeah?
What do you think?
I think it's agentic AI. because they already have decided that those will be the next financial infrastructure of the future.
Yeah. Somewhere there.
Yes, very good. Thank you so much to my panelists. Let's give a big hand, and I wish you a great afternoon, everybody.